Hello and welcome to the Reversing Climate Change podcast. I'm Ross Kenyon. I am here with Ravi Mikkelsen, co-founder at ATMOS Financial. Hey, Ravi.
Hey, Ross. Thanks for having me.
It is my pleasure. Oh, by the way, I'm the creative editor at Nori. Do I even need to say that? I don't know.
Yeah, I'm the chief email officer at ATMOS, so I know what you mean. Blank slate, do everything we need to do to move the mission forward.
I know my titles at startups are notoriously silly, and mine for a long time was lead strategist. I preferred the term cross-functional wildcard because I just would get deployed in strange ways or have ideas or want to run experiments. But it sort of means you do a lot of everything. And it sounds like that's sort of your life too.
Basically, yeah.
Well, I'm happy to have you on because there is a lot of development happening in fintech. I'm sure someone listening says, what is this horrible portmanteau neologism that now you have to explain? It seems like you can just add that suffix tech onto the end of basically anything these days, and it becomes a new vertical to invest in.
100%, yeah. I mean, book tech, food tech, transportation tech, energy tech, clean tech. Yeah, and with fintech, that's been around for 20 years now or more, probably, even longer. I mean, Intuit was started in the 80s. We had PayPal in the late 90s, early 2000s. I don't remember when it started. And then in the last 10 years, really, we saw the rise of neobanks specifically, and that's where ATMOS sits. And it's these digital banks that are software companies and not legal banks themselves. But we work with existing chartered banks to essentially white label their license or charter and then provide lower friction services to customers. So neobanks are becoming very popular because you can apply for an account and most often get approved in 2 to 3 minutes versus going to a local branch, filling out paperwork, actual paper, like with a pen in duplicate or triplicate, and then sometimes it takes a couple of days. I remember.
Robbie, is a bank just that empty building with an ATM attached to
it? Nowadays, yes, mostly. So it's really like other things within tech. It's about reducing the friction, making it easier for customers. Somebody doesn't want a mortgage; they want to buy a house, and so that's what we need to do. It's like, what is the purpose of this product? And so we're facilitating purchasing a home, an EV, solar, et cetera, storing money safely. So how do we do that more easily, more conveniently, and do it where people are? So now we carry, we carry banks with us, we carry dictionaries with us, we carry, taxi hailing services with us. Basically, anything we need, we have in our pocket within our smartphone. And so more and more, we're bringing the services that we use in the physical world, at least, so even still the physical services, we're now being able to call them or make use of them right from within this device that sits in our pocket.
Yeah, there's quite a lot there. And I like the history of fintech broadly and thinking of maybe Intuit. So you probably use their services like Mint or TurboTax. And they've also been involved in carbon removal, and that's been cool. But also PayPal. My understanding is that before PayPal, it really was not safe to buy things on the internet. Is that your understanding too?
Yes, at least, from the history that they put out. I don't remember buying too many things back then. One before then that came out. I remember it like when I was starting like in college. So before that, I had a bank account like through my parents when I was younger, and I was, I saved and did all that. But I don't really remember buying anything online until college. So I remember, I think I did some stock trading at the very end of high school, once I turned 18 and was legally allowed to do so. But yeah, I don't remember buying anything online before PayPal.
The story is possibly more complicated than that, but that's the version that I'm telling today.
We can stick to that one. We'll stick to that one. Give them a little boost.
Yeah. And so we can consider that possibly the birth or origin of fintech. And it's come a long way too. I imagine on any person's phone, I imagine there's at least one app, which is, various banks that you use for different services. But there's also things like types of consumer facing investment apps like Robinhood or Acorn or Stash or some of these other ones. So there's some that have like a trading component. And I also, or like Betterment, Wealthfront. So things like your retirement accounts, those seemingly are all a part of the same movement too, you would say, right?
Right. And, more in our field is New Day Impact, which is more similar to, I think, like Acorns or Wealthfront. But it looks at creating an investment portfolio based on, where you're at, your risk tolerances, and what are the types of more sustainable or like impact type companies that you want to support. So there is a growing field or a growing cohort of companies that, support climate action, support equal rights and racial justice and gender justice and all of these different things that in general are great. And that's the things that we want to support, but they're not mainstream yet. They're not, everywhere. And sort of the climate tech, impact tech, ESG, various words for all of the things. It's like make the planet better and our society better while, creating a profitable business. That's basically, take something good, throw tech on the end of it. And now you've got, a software startup. And so I think, what you're going to talk about fintech within climate change specifically and sort of the climate fintechs, there's a great report released recently by New Energy Nexus, which is a not-for-profit in Oakland and one of the nonprofits that people can donate to on the ATMOS platform. They just did this really great report about the rise of climate fintechs and the role of climate fintechs within climate action. And they looked at several different sectors. So insurance, neobanks, investments, payments, cryptocurrency. And then they looked at it in the US, Europe, and in China. So it was really interesting to see how the space is growing, how we're interacting with sort of the direct action climate tech companies, or as Project Drawdown says, so they describe the energy or the carbon tech as the solutions, and fintechs like ATMOS are the accelerants or the accelerators of those solutions. Because we need to deploy, we need to transition off of fossil fuels to clean energy. And so that is the solution, and lower cost loans from ATMOS accelerates the deployment of that solution.
Yeah, we'll get a bit more into detail on the intersection with climate and fintech, which I suppose we've buried that lead. That is what we're going to talk about on reversing climate change. The ostensible purpose of the show is to talk about such things. I want to build up a nice foundation we can build on in more detail first.
Got it. Sorry, I jumped ahead. I do that sometimes.
It's okay. It's good to tease it out and let people know where we're headed. But we'll back up now a step and we'll keep getting closer and closer to that. Is it appropriate to see fintech startups and companies as primarily software companies that work with banking rather than the other way around?
So software companies that work with banking versus bank companies? I'm not sure I get your question.
I think I'm trying to pin this down a little bit. Is the mentality that of a software company in trying to make like highly scalable, beautiful user experience, automated, plug-in APIs to a bunch of different other apps if possible? This is sort of how I think about fintech. Is that even a correct way to think about it?
Yes, I think so. And not every fintech company, works with a bank as their partner. So there are fintechs that, get their own licenses, but the whole idea is some sort of
become a bank themselves is what you're saying.
Not everyone wants to become a bank or an insurance broker or, a payments processor or like, they don't want to build the rails themselves. They might want to be the car that sits on top of the rails, that runs down the track. But pretty much I would say that either all or the vast majority start off as we're a highly scalable, software company. And, especially if pitching VCs and looking for, outside investment, you are just about guaranteed to need that type of story. Like, we can do this. We can have this level of growth.
You see things like public benefit companies and B Corps existing as a way of getting around this fiduciary responsibility above all else kind of approach, which means impact-driven companies could be pushed into positions that they don't want to be in because either their venture backers want exits, or they're being pushed towards like the IPO model. That's sort of the end goal of all this, right? Is to IPO and be a public company. But the incentives there are really tricky between shareholder profits and mission. So I could see why some of these fintech for good kind of companies, it seems like kind of a risky approach to go down. I'm curious, like, how you've been thinking about it as you've been trying to launch Atmos.
Right. So one, just backing up a step, that being a public benefit corporation, which Atmos is on our way, and we're a pending B Corp, that doesn't necessarily negate or remove the opportunity for us to IPO and to become $1 billion company. Etsy, Ben & Jerry's, was it Ben & Jerry's? I mean, so there are several publicly traded B Corps. I think Patagonia is one of them. Danone, yeah. Or maybe Patagonia is still private. I don't know. But I do know there are a lot of $1 billion B Corps and ones that have, that are publicly listed. So what the public benefit corp and so what that does is sort of changes the legal designation, which allows us to include another stakeholder within, our calculus. So for us, it's the environment. So we cannot, so we have to take the environment into consideration when we're making a business decision. So if we're going to, sell to a large bank, and the outcome is that they stop, essentially shut down operations, and, we reduce the amount of the transition to clean energy and so forth, then that, despite what our outside investors want, we can say, well, this goes against our corporate charter. And so it allows that protection. And there is really no reason not to have both of, doing good for the planet and making a lot of money for investors that we bring in. And it's just sort of this limited mindset that's been used before for against this. So that's sort of the first part of what you said. And then on the second half of, is IPO the exit for fintechs? And if you take outside investment, these investors are going to want their, they want to make a return on their capital. And so that means some sort of exit, whether that's an acquisition or an IPO usually.
Got it. Thanks. Okay. Well, the order of this is getting a little mixed up, Ravi, and that's on me. But I think we should probably introduce what specifically you are working on directly here.
I think we're far enough along to say what we're doing.
Yeah, let's introduce this variable into our conversation. What is Atmos?
Atmos is a banking startup with the purpose of democratizing climate action. And our mission statement states directly, is to finance the rapid transition to the clean economy for all. And we want to move people's deposits from the banks that they're with now. Most likely, it's one of the big four banks, Chase, B of A, Wells Fargo, and Citi, who have, roughly, somewhere between 40 and 50% of all deposits in the US and are the biggest funders of fossil fuel extraction in the world. We want to take those deposits and leverage them to fight climate change. So invest or lend for clean energy, electrification, regenerative agriculture, and eventually, direct air capture, carbon removal, carbon to use, etc.
Yeah, that's so cool. I love it. I obviously, given that it's such a passive decision for where to park your money and which interfaces it makes sense to use, I would strongly prefer my money not to be funding things that in my day job I'm trying to fix, right?
Exactly. I mean, so for like, I've been fighting climate change for almost 20 years now, or just over 20 years now. And, pretty much that entire time, my money has been in opposition or neutral to what I've done. Most of the people in clean energy or in direct air capture or in agriculture, most likely their money sits at a bank. The top 1% of banks is just 50 banks control 70% of the deposits. And these are the banks that are large enough to fund, to be a part of fossil fuel projects. So we need to change that. And similar to what Tesla has done in the automotive industry, our goal, and probably the goal of the other, fintechs and neobanks in this space eventually, because we're going to need lots of them, we need to push these big banks to transition their own asset base, their own lending portfolios away from fossil fuels. And that's not just the $100 million, $200 million, oil or gas deal. It's the internal combustion engine vehicles. It's the fossil gas furnace and stove for somebody's house. Say, we're only going to do electric. We're only going to do clean energy. We're only going to do regenerative agriculture projects. And that's going to take some time because, they're trillion-dollar plus companies, and they need to have to unwind stuff. They need to change their internal incentive structures. But the faster ATMOS gets going and the faster, we show them that this is where the market is heading, the faster they're going to make that decision for themselves. And I don't know if you want to jump back to sort of the genesis of ATMOS, but like it's sort of germane to this specific point.
I do, but I have follow-up questions I want to, before
Let's
it
follow
slips
up.
away.
Let's follow up.
Okay?
Yeah.
This is maybe a little bit of a strange sentiment, but I do feel some sympathy for the position of the big banks, because if they were to try to unload that quantity of fossil fuel assets, I think at the point of unloading, they become truly stranded. If the banks are willing to give up on them, who's going to pick those up? It seems like that would just effectively be a write-off of 9, 10, 11 figure. I'm trying to think of what even those figures are. It's a huge amount of money that is essentially just vanishing into thin air if they do that.
There's a lot of zeros behind the ones in front of those projects.
Yeah. But if they were to just say, we're no longer doing fossil fuels, how do they get any money out of the investments they've made? Are they just screwed?
So there's the existing, assets that they hold. And then there's, continuing to fund future projects. And we've seen progress, especially within the last year, of the big banks saying that they're not, they're stopping, the financing of thermal coal projects, which is thermal coal is sort of the thermal being heat. It's sort of, burning coal for heat, either typically for power generation, energy generation. And then there's metallurgical coal, because we still use coal to produce steel and other products. We'll still finance that for a while, but not the coal for power plants and thermal coal mining, et cetera, et cetera. And also, no Arctic drilling. They're not going to finance Arctic drilling. Great. One, it's uneconomical. So it's a really relatively low bar to jump over for them, but they're now making those statements, which is great. They're saying they're committing to that. And then in terms of actually unloading any sort of, fossil fuel assets that they own, that's trickier. They need to find buyers for them.
But do we even want them to find buyers for them either?
There are proposals for a cash for clunkers for, coal power plants, oil, things like that, because I believe Canada has done this. It was mentioned that England, did this when they shut down the slave trade in England. The country, they paid off, they bought, humans from the slave owners. The U.S. did not. And, that we had a civil war. Like, I heard this the other day, which I didn't know. And, so in this same sentence, this person was saying, we need to buy the assets of, the coal plants, the oil pipelines, and the government can then make the transition. We need the government to step in if we want to make this go easily. The free market is going to do this, and that is going to be a lot more painful, especially for, the people in like the workers on the ground and in the ground in the mines. It's because, the billionaire mine owners, the coal companies, the power plants, they're going to be fine. The executives are going to be fine. The investors are going to be fine because they're going to take whatever they can get. And the employees are the ones that are going to be hurt the most. So this idea of governments using, tax funds and wealthier countries using their capital to, fund the, buying out of these assets is one potential solution to, avoid this problem that you bring up.
It's such a fascinating one too, because on the one hand, if you're able to buy out the slave trade, there's something that's horrifying about having to ameliorate this situation and reduce the political conflict by paying people who did wrong. That's not great.
Yep.
Civil War, though, pretty horrible. Would have been nice to avoid that. And the wounds are still not fully healed from it either. So that's not costless either. I've also seen things, I think this has come up on the show before, but one of our podcast alumnus economist, Brian Kaplan, he has spoken before about how when there's dictators in various countries, what we should consider doing is offering them immunity and paying them off. Just being like, hey, look, we'll make you a billionaire, but you gotta turn over your country to democracy and leave. You're like, that feels horrible. They should not be rewarded, but it's sort of hard to argue with that result as well, especially when the alternative is they stay in power and pass that power to their children in perpetuity.
Yeah. I mean, it's hard just to, discuss these ideas. It's like, wow, rewarding people for doing wrong behavior, but how do we, within the energy community, we're talking about a just transition. It's often used, it's like, okay, there's the racial justice component of, we've cited most, at least, especially in the US, we've cited most of our dirty power plants, water treatment, et cetera, in lower income areas, communities of color and indigenous communities, and, cause greater harm to them versus wealthier and white communities. And globally, we've done the same thing. We've shipped our trash and done the more destructive extraction in, lower income countries, developing countries, et cetera. So there is that component of the just transition is providing, greater resources for this transition to those communities that have received more harm. And then there's also this component of the people who work in those industries which we are trying to move away from. And so if, you've got a coal miner or, an oil derrick worker, and they're making $100,000+ per year, and the equivalent job in clean energy is making much less, how do we make that work for them? How do we make them have any job? If this is where the economy is going and needs to go, how do we make it work for them as well? Compassion as human, yes, but really, like I said, the owners and investors of these companies are all fine. Like, I'm not worried about them at all. But then from the free market standpoint, yada, 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 you got to take care of them too. Whatever. Let's take care of the people who've been harmed and the people who will be harmed, actually, not just, my portfolio is down a couple of basis points because, that this is now a stranded asset.
Yeah, sorry, I'm not really asking you easy questions here, Ravi.
That's all right. It's Wednesday afternoon. It's the time for hard questions.
Yeah. How do you solve the problems inherent in changing the economy in major ways with stakeholders with a vested interest in the status quo? Yeah. Well, I'll let you move on then. Okay, so that's the sort of hard, difficult, more negative side of the equation. I see ATMOS as much more of doing what is right rather than fixing what was wrong. God, maybe that framing is bad too. But what exactly does one do once one moves one's money over to Atmos? What does it look like? What exactly is it supposed to do? How does it work?
Yeah, thank you. And, I love diving into these hard questions too. And done wrong, fossil fuels created, great yet widely, unequal wealth in this world. It's created like all of the trappings we have in America and created, our great nation. So there is something to be grateful for, but we've also known for the last, 60, 70 years now at a governmental level and in corporate level in the US that we needed to move away from them. And the fossil industry has, fought against that. So yes, you're saying it's like, okay, they've done wrong. Well, fossil fuels did some great things for us, the harnessing of energy, but we've also known for, nearly a century now that we need to get off them and we haven't moved fast enough. So it's this transition of just that's negative to what's the positive. It's like, what do we do? And like you said, one step is to move your money out of the banks that are funding fossil fuel extraction into, climate fintechs, neobanks like ATMOS that will use your money to finance this transition and reward you for it. The national average, yield on a savings account right now is, 0.05%. A lot of the biggest banks are paying 0.01 or 0.02%. We're starting off at 0.3% and our top rate is 0.51%, a 0.5%. So 10x the national average. So you have a savings account with somewhere else, you're earning almost nothing on it. You move it to Atmos, you're earning 10 times that amount, and you're having a direct impact, on stopping climate change because we're going to take those funds. And right now we are partnering with banks who directly lend that into clean energy projects. So that's sort of, Atmos 1.0. That's where we are right now. But we're really building out the full stack banking suite and credit cards, commercial accounts. And eventually, later this year, we're going to start lending money ourselves, which is where things get really interesting because we get to more directly dictate the pricing on that. And so we can make all of these things that we want and need to have happen. So this transition, we can more directly, lower the cost while still, keeping ourselves profitable. We're not going to, lose money, but we can make, solar or rooftop solar affordable for millions of more Americans than right now. Electric vehicles, e-bikes, accessory dwelling units, so increased densification and, net zero homes, passive house, so many opportunities. And I could just ramble on, which I am doing, obviously. But that is kind of where we're at and where we're going in a 1-minute rant.
Yeah. A couple related questions. How are you able to offer such a higher savings interest rate? And how are you able to write and service loans for less than is conventionally done?
Right. So our savings rate, and I use that term because interest rate and interest yield are regulated or protected terms for what the bank offers.
Okay.
And so right now, the savings rate that comes from Atmos, that's a payment from us directly.
Okay.
And we're able to offer that. And similarly, the pricing on our loans is, we're not going to have branches. So we don't have the physical locations that we need to pay, rent or mortgage for. We are built on a brand new technology stack. So a lot of, the biggest banks, they started introducing software, 40 years ago, 50 years ago, and they've maintained that software rather than paying to, redo everything. So a lot of their budget is in the maintenance of COBOL and Fortran and these other antiquated, software languages. I know people who can write in those languages and earning $1 million a year basically out of college because there are so few people who can do that work. And then lastly, we're building, as I said, our technology is brand new. And so we can use machine learning and other advanced underwriting techniques and technologies so that we can reduce the amount of human time that it will take to approve each loan. So we can, as we talked earlier, we can get to a massive scale without having a very large team of loan processors to underwrite and approve each loan. The big banks, they're not set up for, to do a $20,000, $30,000, $40,000 solar loan. It's one of the reasons that they haven't gotten involved, other than doing, multi-million-dollar utility scale projects.
Are there a lot of other intersections between climate and fintech? I've seen things like a credit card, which instead of giving you airline miles, they'll buy offsets on your behalf. And I imagine there's quite a lot going on that I'm not even aware of. What's the space look like overall?
Yeah, it's, growing pretty quickly. The neobanks, there's payments. So the existing, solar lenders, they would be considered, climate fintech. So there's an insurance company called Energetic Insurance. They fall under that category. They help reduce the cost of commercial solar projects because, they can underwrite them. And there's other auto insurance you could kind of fit them in, like Lemonade. And then underwriting, how do you process payments for off-grid solar? If, in a lot of developing countries, it's like, put lights on your roof, and then I'm going to come around every month to collect payment. Well, it's like, how do you do, payment solutions there? That's climate fintech. So the solutions that are developing are different based on the market and based on, sort of the sector they're going after. But there are companies that are forming and growing at sort of every stage. Yeah. So from insurance to banking, to payments, to credit cards, like you said, all sorts of different things. So credit cards with the points for offsets or for other projects, or setting carbon budgets. Probably think of a few more as we go, but it nascent, but it's a growing space other than sort of the fintech lenders for clean energy. Like Solar Citi and Sunrun, massive publicly traded now. Solar Citi is part of Tesla, but that was, a quote unquote climate fintech.
Yeah, certainly. Yeah. When I think about why I do banking with the groups that I bank with, I'm trying to run through the reasons, and maybe you can tell me if this maps with your experience in doing customer research and trying to develop this. But I care about not paying ATM fees. And I like it when my banks also have credit cards with valuable partners, whether that's airlines or something else. So I think Chase has a really, almost certainly the most valuable credit card operation of any of the big banks. And I like having it as a relatively quick, low fee intersection that I can pay bills through. But there are also things I see, like many fintech startups reimburse for ATM fees. So maybe that matters less than I think it does. And I'm trying to think of a good reason besides the credit card thing.
So, let me put it back to you. So it sounds like you're with Chase. Before, our conversation, and I said that Chase is, I said it's one of them, but it's actually, the largest, funder of fossil fuels in the world. One, did you know that?
I didn't know it was the largest in the world, but I assumed that they were funding things I probably didn't like very much.
Yeah. So now that you know that Chase is, it's like, how do you feel? It's like, because this is like you said, it's in direct opposition to what you do on a daily basis. But at the same time, you probably get a lot of services from them that, cannot be replicated right away from, fintechs like ATMOS. Like right now we're launching with a savings account, and then we're going to add these other things in. And so, it's like, well, Ross, I want you to move some money to ATMOS, but I understand that we're not going to be able to replace your entire relationship right away. So again, let's have a little compassion for you. I don't want to, make fun of you or say anything bad. That's like, okay, you're with Chase. And it's like, yeah, now that you know this, let's start to replace those services that you get from them with, services like ATMOS that are going to use your money how you want it, which is to stop climate change or, reverse climate change even, as this podcast is so aptly named. And so now that it's like, would you include this calculus of what, your banking provider, what they do with your money? Is that now going to be a part of, your thinking as you look for future service providers?
I think so. I ceteris paribus, I prefer my money not to be doing things I don't like. I've also done things in the past of moving money to credit unions or like local neighborhood banks where I am rather than a gigantic set of banks. Tell you the truth, though, the user experience at bigger banks that I've had is much superior. Most of it's at the software level too, trying to interact with these, not very nice apps and websites, and then also having. I've found like bigger banks are sometimes more forgiving with fees, even small things like ACH transfers being feeless. I've seen that more at bigger banks like Chase than I've seen at the credit union where, if I have to get charged $3 every time I'm moving money between accounts to pay bills in the right kind of way, big headache. And I'm not sure how to weight this against some of the more ethical considerations here, but I do sort of expect a beautiful user experience. I'm spoiled at this point is basically what I'm saying. I'm not saying this is either I'm some sort of paragon of virtue here either, but I imagine maybe I'm a good stand-in for the average person.
Yeah, we've done some user surveys and some market research before launching, and you are not alone. The no fees, the convenience. Yes, big banks, they've got $1 billion software budget versus, your community bank or credit union may have, $10,000. And so they hire a contractor every few years to make some updates to their app. So it is a wide disparity. And it's like, hey, I just need this to work. I don't have a lot of time. I can sign up for a Chase account in a few minutes on a mobile app. And so that's where people go. There's a branch on every single corner. It's like that, they make it really easy to sign up with them. And that is kind of where we come in. And it's like, hey, we're going to make it just as easy, if not easier, to sign up for an account. We're going to make it beautiful. You did sign up for an account and you didn't sign up for, a beta account a few months ago. So you didn't get to see all the progress that we've made in all the work we've put in to make it intuitive. But that's our goal, is to make it invisible so that it just, it just works. And then you can do great things with it. So one of the things we're launching with is the ability to donate, frictionlessly to, these various world-changing nonprofits. And as I mentioned earlier, to the new Energy Nexus report, so we've got clean energy, we've got, youth climate action, we've got endangered species, indigenous rights, ocean conservation, all sorts of different nonprofits that we're working with. And because we're paying, a high savings rate, part of that, that 0.51% is a little bump, a 0.11% bonus if you make a donation. So if you want to share a portion of that little, monthly bonus, that monthly savings rate that we give, we're going to give you an extra bump because we're grateful for you helping these nonprofits to do their work. And then we're collecting. So you said one of the things you like is a credit card with partner benefits with these, offers. So we've got some of those. You can get a discount on going clean energy. Or rather, you'll get a $25 into your ATMOS account if you sign up for Arcadia Power, which is a clean energy retail vendor. So we're trying to, replace the services and provide that full suite that you're looking for in the big bank, but put all of your money towards reversing climate change and have an even better experience. No fees. One of the largest revenue sources for those big banks are those nickel and dime fees, overcharge fees, wire fees, ACH fees, or not ACH fees, but definitely wire fees of $20, $30, ATM fees, all sorts of things. So we want to get rid of those. We want to make it more human, and we want to make it more inclusive and fair, and we want to reverse climate change.
Yeah, I think a lot of that speaks to me pretty clearly. But I did think of something that I found more persuasive than everything we've just talked about. And it's a little emotional and maybe a tiny bit maudlin, but I'm hoping you'll allow it, Ravi.
Go for it, Ross. I mean, you're giving me sales points. I love this. What spoke to you about Atmos?
If I was watching It's a Wonderful Life, I would want to bank with George Bailey, right? Like that's have you seen that? Do you even know what I'm talking about?
I do know what you're talking about.
That's like, you wouldn't want to be like, well, the mean guy, I think he offers no fees. I should probably bank with the terrible guy. You should probably bank with George Bailey, right?
Yeah, I agree. And are you saying that I'm George Bailey-ish?
I think you're on the right road to George Baileydom, and I need to look farther into it. But I think you are headed that direction, which is great.
Well, thank you. I take that as a compliment.
It's meant highly so, because sometimes I take pleasure historically in being like a little bit hard-nosed and being like, oh, well, I'm like a rational consumer and they're not charging me fees and blah, blah, blah. And who cares if I don't do anything, because the system as a whole isn't going to change. So why should I take like a worse experience with higher fees if it doesn't actually change the thing overall? And I've actually had a change of heart over that, and probably over the last year, where I'm like, because there's a sense in which you only control your actions. So you can't control outside events really in meaningful ways for the most part. So that's a good reason to act selfishly, because everyone else is. But since you can only control your own actions, that's actually a good reason to act more nobly, or to at least aim that direction. So I've been trying to like flip that game theory that's been just pounded into my head over the years, and try to be a cooperator rather than a defector in the prisoner's dilemma that is life.
And prisoner's dilemma, it trends towards cooperation, as you iterate on it and you run it multiple times. And that's really what life is. It's an iterated prisoner's dilemma conundrum, and that, leads towards cooperation. And I think ultimately as we, look to that, then our, businesses, it's like Tesla, hopefully eventually, we use that analogy because, it's a beautiful, well-functioning machine. It's a great to drive. And it's like, you don't have to sacrifice. 15 years ago, people were putting lead acid batteries, into the trunk of their car and swapping out the engine for a electric motor. And that was the EVs of the time. And now you got ones with hyperdrive, it's ludicrous mode, all this stuff. So the idea that we have to sacrifice or lose to do the right thing, I think is shifting. And that's what we're trying to do. And I think as an industry and as sort of community, it's not put on a sweater because it's cold. It's, hey, we've got so much power because we've got an overabundance of sunshine, and we're now properly air sealing our homes and doing this right. And it's fantastic, and we're comfortable, but we're not paying an arm and a leg for our energy. It's like, let's not sacrifice. Let's have an abundance, but we're doing the right thing now.
Wow. Well, where do you see Atmos going in the next couple of years? And I guess maybe in order to answer that, where are you right now? Are you raising money? What are you doing?
No, so we're not raising money at the moment. We finished that for this round, and we just launched yesterday. This is Wednesday, January 13th. And, we went live yesterday and are growing. So we're getting the word out, and we have a savings account right now, and we're going to be building on top of that. So, we'll have multiple savings accounts and be able to sort of structure around that. And then in the coming months, we plan to offer a debit card, commercial accounts, because, just as individuals, it's like, we don't want our money to be used. Like, why are solar installation companies and, carbon capture companies, why is that the money that, of these companies, why are all of our companies being used in direct opposition to the work of the company itself? And then, the big thing is, like I said, is we're going to start making loans later this year and offering, credit. Perhaps that's a credit card, perhaps it's some other form of that. But then the loan, so, reducing the cost for residential solar, for electrification, for EVs, e-bikes, etc. And it's how do we use capital more effectively from a, bank or banking provider. From that standpoint, how do we use capital to reverse climate change? And that's, what we're going to keep iterating on. We have a plan for the next few months. Beyond that, it's really hard to say. 2 years out, that's a different life.
Yeah, that's really great to hear. I have tried many of these apps before and played around on them. And I like being involved in thinking about my finances, where my money is spent and stored. And I certainly look for various types of incentives and deals with inside of the various financial institutions of which I am a part. Though I got to say, I've been slacking, and this is a component that I haven't really thought that much about. And part of it is because of those sort of inferior user experience decisions or experiences. But I think I really need to meditate on George Bailey. Everything else you said, Ravi, it's all very good, but honestly, I think you should lean on that. I'm sure that's deeply patented, copyrighted, but that speaks to me. I find that the most persuasive of anything, and that makes me kind of a sucker and sentimental, but it's true.
Hey, we haven't thrown that into our multivariate advertising testing, so I'm going to create a landing page around ATMOS as a what is it? I forget the name of his bank. It's like
the building and loan. I just watched it over Christmas.
It's like something savings and loan. Bailey Savings and Loan. It's named after his last name. The old George Bailey. We'll run with it. We'll see how it goes. But I think, doing the right thing and working with the customer as George Bailey did, as, me and Pete, my co-founder, and our whole team, like you said, cooperation. We want to work with people. We're not trying to get one over on people and use trickery to make it so that you overspend and we charge you $30 on an overcharge fee like some of the big banks do. We want to make it so that we all thrive. It's like, hey, you're saving more money. You're earning more money. You're spending less. It's like, these are great things because we're leveraging that money to finance the transition and reverse climate change. So like, we can all win if we work together. George Bailey for the win.
I bet you didn't expect that to be where we ended on, huh?
I didn't think we were going to go there, but I like it. I'm here for it.
You didn't know I was such a sappy, melodramatic kind of guy, but it's true. I am.
If it works, it works.
All right. Well, if someone wants to try ATMOS, where can they find you? What should they do? Give them some tips here to get started.
Sure thing. If anyone would like to join ATMOS, they can go to joinatmos.com. And that is joinatmos.com. We're also the same on Twitter and Facebook and Instagram and LinkedIn. My email is ravi@joinatmos.com. So feel free to reach out. And yeah, even if you aren't joining, but you have questions, feel free to reach out. And I hope, I'll do my best to answer them. And then maybe you'll join. And then together we can, move our money and reverse climate change.
Great. Well, links to all of those things are in the show notes if you'd like to follow up, join ATMOS, etc. Ravi, thanks so much for being on the show.
Ross, this has been a great pleasure, and I look forward to doing it again in the future.
Sure. Happy to have you back on for an update. Thanks, listeners. Thanks for listening. I hope you enjoyed it. If you did, if you're a fan of the show and you haven't already and you're on an iPhone, please open up your podcast app, which comes natively on your phone. Give us a great rating, 5 stars if you truly believe that is deserving of it. And write us a review. It certainly helps us a lot, get this out to more people. And thank you, as always, for listening.